All right. Hello and greetings, everybody. Welcome to the GRESB Infrastructure Americas 2020 results event. My name is Dan Winters. I'm head of Americas. We're going to take just a few moments and allow some folks to join in. So we're going to target probably 2 minutes after the bottom of the hour, and then we'll start up and get going with the whole crew. We had 180 roughly that had signed up. So we're looking for a big crowd. And next week, when some of our other events start to hit, we're going to have double, sometimes even triple the amount of folks. So thanks for joining today. Give us another 90 seconds and we'll get rolling. All right, I think we're about rounding that corner here. So with that, let's get started. Again, greetings. My name is Dan Winters. I'm head of Americas with GRESB, and welcome to the GRESB 2020 results event for infrastructure in the Americas. I'm sure that you can all relate to this. 2020 has been quite an eventful year for all of us. At GRESB, we're most pleased to report that ESG maintains strong market momentum, and you're going to see that in this year's results. We have a great lineup for you today, and so we're joined by a number of groups. So let me just kind of go down the list. First off, we have a GRESB founding investor member from APG Asset Management. We've got a repeat sector leader from Capital Dynamics. GRESB Most Improved Awardee. I call this the ESG Momentum Award, and for engaging with their assets, which is honestly the real charm to me of the GRESB assessment, is being able to work with those assets. So we have the GRESB Most Improved Awardee, which is Alinda Capital Partners. And then we're also joined by 3 GRESB global partners: Avora from the UK, one of the leading ESG consulting firms in the EU, PwC's US-based ESG and sustainability and assurance practice. We've got 2 folks from there. And then we also have some special welcome and closing remarks from GHD. And GHD is a 10,000 person services company. They offer a broad range of advisory, technical, engineering, and management solutions, with a tremendous focus on ES&G. So before we get started, and before we do move into this program, I'd like to make a few remarks of my own. And so, as I look back and thinking about 2020, ESG started this year with tremendous promise. Right? GRESB members had spent the last decade defining what ESG means for real estate. We did this as a global community, collectively developing and progressing the GRESB framework. In 2016, we launched the GRESB Infrastructure Assessment. In doing so, what we're doing is we're collectively knitting together a data infrastructure to support structured non-financial data. When we did launch GRESB Infrastructure in 2016, we did this with the support of many longstanding GRESB investor members. And now in its 5th year, the infrastructure assessment has helped us evolve to become more than just real estate. GRESB has become the ESG benchmark for real asset investment portfolios globally. Through this evolution, it's become abundantly clear that a by industry, for industry framework that's focused on best practices, this yields strong business benefits. It progresses the industry forward and it drives a competitive race to the top. These are some themes that you're going to hear woven throughout our time today, as well as the events that we're hosting globally through the remainder of the year. So my real message here is this: don't let the COVID curveball throw you off balance, right? Or knock you off stride. The ESG, if anything, is here to stay, and this is a practice run for climate disruption. This is my own personal view on this, but it's pretty clear where we're heading, and so thanks to everybody here for all your leadership. Okay, so topics and themes to watch. 5 issues. First, ESG is a lens to business opportunities and operational efficiencies. I'm confident you're going to hear that from a number of our participants today. I brought up the idea, second, of structured financial data, or excuse me, structured non-financial data, right? And what does that mean? And so it's all about access, lineage, reliability, and assurance, having good quality non-financial data really can help drive metrics and better business decisions. Third is climate change, right? Doing risk analysis, both on physical risk and transitional risk. Big theme, big forward focus for a lot of our participants. Decarbonization targets have really become in vogue, right? Being able to set a target and then have the metrics and realize those going forward is something a lot of the leaders are doing. So you're going to hear about that. Being able to implement and track those metrics over time is key. And then the last is how folks use the GRESB framework to develop and advance asset level ESG programs. Again, highlighting that non-financial data in a structured way to move it ahead. Okay, so who's with us today, right? Our audience really boils down to 4 different groups, but they're all interrelated. First off, our institutional investors, pension funds, consultants, sovereign wealth funds, right? The second group are the benchmark participants. These are typically private equity funds and firms, as well as listed companies that benchmark themselves using the GRESB framework. Third are partner organizations. We've got service providers, consultants, and data platforms all helping push the industry forward on ESG. And then the last are, potential 2021 GRESB participants who are curious, who are trying to understand what's happening with this group and wanting to move their firms forward as well. And these are infrastructure funds and firms as well as listed companies. Just a couple things of housekeeping, right? First off, no direct attribution. You're going to hear some great things over our time together. And so if you want to follow up with any of the speakers, they're always do that if you want to learn more. The second are questions. Please offer your questions in the chat function. We will be monitoring these and try to address as many of them verbally as we can. I also have some colleagues from the infrastructure team that are on with us, and they're going to try to answer some of those questions as they come in as well. The third is, just an incredible thank you to our industry supporters. There's a list of them here. I'm going to just go over them. First is GLIO, the Global Listed Infrastructure Organization. Obviously, PRI, the Principles for Responsible Investment. We work really hard, really closely to harmonize with our collective efforts. Third is the Global Infrastructure Investor Association. And there's another group, the Long-Term Infrastructure Investors Association. They're part of BRE. And then last is our media friends at IREI Infrastructure, who do a really good job of covering this sector. So, and the last thing I'll point out is, check out GRESB.com for more events. This is, I believe, our 4th event, and we have a long lineup, I think almost close to 20 this year globally. Welcome to the 2D world where we can do this without having to run around the planet and do all of the travel. So I think we're going to have more events than we haven't had in the past, and attendance is definitely up. So momentum is here, and we're going to keep it going into 2021. So with that, to get us started today, I have to introduce Greg Carley. He's an executive advisor for ESG, sustainability, and resilience at GH. He's based in Toronto, Canada. GH companies. They've got focus on infrastructure, asset construction, and operations, and they cover water, energy, natural resources, transportation, digital infrastructure, and environmental management. That's a mouthful, I know, but it really comes down to this. If you need to build a dam, dig a tunnel, develop hydrogen fuel cells, or use geospatial data to improve your business decisions, GHD has an expert to help. So Greg, with that, welcome to the GRESB 2020 Infrastructure Results Events. The floor is yours.
Thanks, Dan. That's a great introduction. I don't think I could have done a sales pitch for GHD better. So you're hired. Come on over. So yeah, it's a pleasure to be here with you and hosting this event. Welcome everyone and to today's event. It's great to be here, even though we are virtual and not in person. It'd be great to get together in person, but hopefully we can still be able through the chat and through engagement with this really engaging set of panels and speakers we have today, be able to recreate some of what we would normally do when we all are in person. As Dan was saying, GHD is one of the world's leading professional services firms. I work with our advisory practice in the area of ESG, sustainability, and resilience, and lead that practice for our North American business. We leverage our strong understanding of businesses and their assets. We assist clients to make investments and business decisions that support their strategy and sustainability goals, while also seeking to improve their physical, natural, and social environments and the many communities in which we operate. through our ESG advisory work, we are able to see that a proactive approach to ESG creates an increasing investment in returns. And I think we'll probably see a lot of that discussion around here today as well. As I say, so excited to be here today. I think it's really great that GRESB has continued to move forward and doing these events, even though we are in a virtual sense. Really excited to see the 2020 GRESB Infrastructure America results today, and really keen to get discussion going through the chat and learn a lot from our panelists today. Dan?
Awesome. Greg, thanks. You know, I spent some time talking to folks out in the industry and poking around and looking at projects that you guys have done. So it's really clear GHD is doing cutting edge work. And, you know, at the end of the day, what we're all of us that have tuned in here, we're all pushing for a better tomorrow. So thanks so much and keep up the great work.
Our pleasure.
All right. So let's get our program started. I'm incredibly pleased to introduce Rick Walters. He's our GRESB Director of Infrastructure, and he's based in our Amsterdam office. Rick joined GRESB several years ago, and he brought a wealth of knowledge on sustainability best practices in the infrastructure sector to our group, and has really elevated the infrastructure assessment for all of us. Rick, it's been a roller coaster year. Tell us how the infrastructure asset class is faring on ESG. The floor is yours.
Great, thanks, Dan. And yeah, I'm very proud to be here, sitting in our Amsterdam office, but speaking to all you folks in North America and probably globally, I imagine as well. But great to be talking to you. I would much rather be over there in person, meeting and shaking hands and maybe having a glass of wine or two as well. But circumstances don't let us do that. So this is the next best thing, and looking forward to taking you through the results. So I'll just get my presentation kicked in to make it a little easier for us here. Shuffle things around a little bit here. And let's swap that over. Okay. So yes, 2020 results for Americas. Let me take you through it. As Dan said, there's our program, so I won't go over that in too much detail, just again to show you. And just a quick reminder of what GRESB is about. At the end of the day, in many ways, we're a engagement platform. We have the assets there on the left that report to GRESB, provide their performance data, and we give them back ESG analytics benchmark data back that is useful for business intelligence. And most importantly, we also connect to the investors in those assets. They get analytics, they get information out of those assessments, and they provide their perspective back into those assessments for their improvement. But ultimately, they're also engaging with the assets. So this is the platform that we create, and this is where I guess the magic happens. And just a quick reminder also of the infrastructure assessment and how it works. We have a fund assessment at the top and an asset assessment shown on this diagram at the bottom. So it's important to understand how these kind of components work together. With the fund assessment, it's comprised of a management component and a performance component. The performance component is actually not completed by the funds themselves. It's actually an aggregation of the underlying asset assessments. So just bear that in mind. And that provides a 70% contribution to the GRESB score for the fund, the other 30% coming from the management component. Then we drop down to the asset assessment at the bottom. Again, the asset assessment comprised of two components, management and performance. In this case, 50-50 contribution to scores between those two components. So that's important to understand how those components work together. And the introduction of the management and performance components, particularly it was new this year in the asset assessment, brought that flexibility in reporting whereby participants could elect to complete just one component if they wished. And that was perhaps a good way to start the process if they've never used GRESB before. And notably, a small number of assets did take up that opportunity this year. Okay, so as Dan said, very exciting that it's 5 years in for GRESB infrastructure. And a lot has happened in that time. Let me talk about it. Firstly, in terms of the participation, looking at funds, despite the challenges posed by the COVID crisis, the fund assessment grew with now 75 funds completing both components and therefore obtaining the GRESB fund score, and overall 118 completing the management component. The assessment covers now 38% of the infrastructure investor top 50 participating with at least one fund. So that's getting to a good coverage now of the major infrastructure fund managers globally. You can see here that European focused funds are the largest contingent, followed by globally diversified, but there's a good contribution from American funds or American focused funds and globally diversified. And that has grown both in the management component and in the overall. Looking now at assets, and we'll just focus here a little less on geography and a bit more on the sectors. So again, growth again in participation and growth across pretty much all sectors. The highest representation continues to be from transport, from renewable power, and from social. Very interestingly, data infrastructure won 38 assets, perhaps reflecting the importance of this sector during the COVID crisis. Energy and water resources also grew significantly, and most other sectors, there was a stable kind of participation. There were some churn, but new entrants coming in as well. Assets reported on 6 continents, and within those assets, over 1,354 facilities reported, being in 19. Coverage continued to be dominated by OECD countries. Again, we're hopeful and planning for greater contribution from emerging markets, and in this region, we plan for and intend to encourage more participation from South and Central America. Europe builds upon its track record for transparency with the most funds and assets participating in the benchmark by value. Globally diversified assets scored the highest, 83 on average, but notably that's a small contingent that are globally diversified assets. Assets in Oceania, Americas, and Asia scored similarly. You can see the averages are almost identical, while the European average was somewhat lower in scores. This seems to be because there's a significant number of social infrastructure assets in Europe, and they typically score a bit lower than other sectors. There was one asset in Africa, but not enough participants to provide an average score that isn't anonymous. Okay, looking at the fund model. The model, just a reminder, is the management component and the performance component projected on a 2D plane to give that overall kind of perspective. And what jumps out immediately here, hopefully to everybody, is the big rise in fund scores this year. This shows funds are eligible for that overall GRESB fund score when they complete both components, and that means they have to report with at least 25% of their assets. In this case, they're represented by the blue dots, all those who got a GRESB fund score. Those who just completed the management component are shown by the gray dots sitting on the y-axis. So as I said, both the management performance scores rose, and in this case by somewhere between 10 and 15 points. And what we're actually seeing here is fund scores, GRESB scores, are starting to cluster a bit in the top right corner of the chart. And that's similar to the experience seen in the GRESB real estate benchmark. And what that shows is there's a real maturing of the industry. People are realizing what is needed to get good ESG performance, and they're going for it. And hence their scores are increasing, and perhaps they're starting to move towards a ceiling. Obviously, we will continue to raise the bar in terms of addressing important ESG issues. And so we might see that balance between clustering and spreading out over time as well. And Americas, you can see the red dots, they're showing participation of funds in Americas, pretty big spread there, quite a few clustering on the y-axis, and we really want to see those start to participate with a good portion of their assets, their underlying assets, to get a performance score and move off the axis and show their true performance on both dimensions. Looking now at assets and the asset model, same dimensions again of management and performance components. Again, big jump in scores, clearly evident. Just a note here, the brown average dots. In the past, we had 2 dimensions in the asset of management policy and implementation and measurement. They map approximately to the new management performance components and do provide a useful trend comparison, but they were slightly differently constructed, just as a note. Unlike for the fund model yet, scores aren't clustering in the top right corner, although maybe this will occur in future years. You probably can see on the chart the clusters of performance scores around 95 and 54. I'll just put my cursor on those. You may be wondering what that's due to. The 95, there's actually 29 assets that score full points for the performance component indicators apart from certifications. There's an indicator on certifications. Not many are getting a score for that yet. So in essence, these assets are all doing well and being fully reporting, setting targets for their most material ESG issues. Hence, they're scoring full points for all of those issues, and they all line up. I guess they're maxing out on their performance score pretty much. So again, interesting to see that happening and see if that continues. The lower 54 clustering is due to one manager with a portfolio of schools that scored identically in the performance component. Again, overlaying America's results, pretty big spread, some pretty good results there. And you can see that the America's average well exceeds the global average. So doing well there, we're seeing good performance on the asset side. Looking now at sectors, this chart shows the number of assets participating and average scores broken down by sectors at a high level at least. Participation was strongest in transport, followed by renewables and social infrastructure. The best scoring sector continues to be network utilities with an average of 73, closely followed by power generation excluding renewables, 72, and renewable power, 69. The lowest average score is again for social infrastructure at 47, although this did show one of the largest score increases, plus 18 on last year, narrowing the gap to other sectors, and this is pleasing to see. The biggest increases in score were for the two energy generation sectors, being power generation excluding renewables and renewable power, increases of plus 25 and plus 20 respectively. So we're seeing a big change there in their performance. Okay, looking at performance itself and diving a little bit underneath those scores, this chart shows us the extent to which assets report and set targets on their most material ESG issues. The issues covered here are the main ESG issues, not all of them, that within the asset assessment. We're showing here with the open circle, the proportion of participants that report on the performance indicator related to these ESG issues. So energy, greenhouse, air pollution, etc. And you can see by looking at the trend from 2019 to 2020, in almost every case, there's an increase in reporting on these important ESG issues. Health and safety, a bit more stable, every other one increased. The other 2 points on the charts are whether they have targets for the reporting year with the solid circle and the long-term target with the bar. And here, in every case, there's an increase in setting targets. So this is that real maturing of the industry. It's notable that in almost every case, reporting has increased, and in every case, target setting has increased. So you can see why the scores are improving straight away from this data. Okay, we also do a public disclosure assessment for listed infrastructure companies, and we do that in partnership with GLIO, the Global Listed Infrastructure Organization. I'm not going to go through too much detail, but a quick summary. This chart, this world map, shows the number of participants within the circle, the number of listed infrastructure companies. And in this case, with public disclosure, we give an A to E score, A being the most disclosure, most transparent, to E being the lowest. And you can see that in the sort of donut colors around each participation number. Europe has the most companies that scored an A level, the top level, but relative to their sample size, Oceania had the most with A level scores in proportion with 13%. We now cover within this data set more than 200 listed infrastructure companies, more than 2.5 trillion US dollars in market cap. And consistent with that partnership with GLIO, This year, we're launching an ESG filtered infrastructure index for investors. So that's an exciting development. By year end, that GLEO and GRESB with GPR will be launching an infrastructure company index. So look out for that one. Okay, looking ahead, what's coming up for GRESB in infrastructure in the future, and particularly next year? There's a number of sort of improvements that we're proposing. We've had our resilience module now run for 3 years. So there's a process to integrate that into the assessments, and it'll no longer be an optional voluntary module. It'll be just part of the assessment and mandatory. No major changes in the fund assessment itself. No major changes in the asset management component, although we're looking at a ESG controversy data indicator for scoring of ESG incidents using potentially third-party data. In the asset performance component, we're looking to make improvements to the tables to simplify and clarify reporting, and take our kind of next steps towards truly scoring performance and weighting that in the assessment. We're looking to add a new component on assets in development to more specifically address projects, not just operating assets. We're looking to add automatic real-time outlier checks in the portal. So essentially, if you start to put in data in the portal when you're doing your assessment and it looks a bit off, well, always get caught out by the sensors. If you're looking to put in data and it looks like it's outside a normal range, you'll be alerted to that straight away in the portal and get an opportunity to correct that, so that it enhances data quality, reduces potential for errors. And lastly, we're looking to add live scoring in the portal to increase transparency, again, reduce potential for errors, and provide immediate feedback to participants, so you know if you're on the right track, you know the kind of things you might want to start implementing when you're doing the assessment, rather than waiting till November when your results come out. So a number of features there we're looking at for 2021. Okay, I've got a couple of slides on the panel topics just to sow the seed on a few things. Hopefully this helps go into the discussion and sets things up. Look, EU regulations, many of you I'm sure have heard about these. There's a big sort of green agenda in the EU, and that's going to mean a whole bunch of regulations coming in. Some of the key ones highlighted here. The EU taxonomy, I'm sure many of you have heard about, defines what is sustainable finance, and that will link into certain characteristics of assets and certain thresholds of performance, which GRESB will be reflecting within our assessment. And in fact, many of you will already have seen in your results that we're already showing indicative taxonomy information in this year's benchmark reports. SFDR, the Sustainable Finance Disclosure Regulation, is another one coming in for financial products in the EU. And that requires disclosure of a set of 32 key kind of metrics or indicators. Again, GRESB looking to make sure that we provide an easy pathway to reflect that information. And lastly, NFRD, which is the Non-Financial Reporting Directive. Lots of acronyms here, don't get too hung up on the alphabet soup. But the NFRD is for companies or corporates disclosing ESG data. That is under review. It's been around for a while, but is under review, and will look to tie into both the taxonomy and linking to the financial products being through the SFDR. So that sort of trifecta is the main elements. There are other elements too, but important to know that's coming and will largely be one of the pieces that starts to standardize and harmonize ESG reporting in the coming years. Very interesting to see how that gets picked up, obviously in the EU, but even outside. Our resilience module, I mentioned in its third year this year, we've seen a good improvement in participation in that. You can see on the left. Interestingly, some drops in scores for funds and assets, a little bit down. That is largely, we think, due to the new entrants. So I think what we're seeing there is we're getting new people reporting on resilience, or aligned to the TCFD, the Task Force on Climate-Related Financial Disclosures. And whereas perhaps in past years we had the leaders getting into this and starting to report, we're probably refining a few of the followers coming in now. Perhaps aren't doing quite as well, but are realizing they need to get their head around TCFD, and so are starting to report. So yes, the scores are dropping a bit, but with that increased participation, we're getting more and more participation involvement in TCFD and resilience, and that bodes well for the industry. Decarbonisation is part of that approach to resilience and transition. I'm not going to go through all of these different examples, but there are a menu of options that investors are considering for decarbonisation, how to address this transition. What I really want to note here, though, is if you look at each of these, they all involve infrastructure. Either it changes the way infrastructure needs to be operated, like energy efficiency, or they require new infrastructure, like hydrogen, like carbon sequestration, carbon capture and sequestration. So these essentially, they present challenges, but actually there's a huge opportunity for the infrastructure industry in the drive for decarbonisation and the move towards net zero and the like. And those investors and those managers that really get that and grab a hold of this opportunity will do super well. And then, we couldn't go through this without talking about COVID, and I'm sure the panelists will more. We had a look at the COVID impacts from a GRESB perspective. We were very concerned earlier in the year of what COVID would do to GRESB participation. Would managers, would participants say, look, we love GRESB, we want to keep reporting, but realistically, we can't do it this year. We just haven't got the resources or the headspace. And already you've seen from the results, we didn't see that. We did get some more churn. We did get, as shown on this chart, the big green solid bar, a number dropped out in the assets. And the smaller number here is attributed to COVID. And we analyzed that. And you can see in terms of the sectors it covers, not surprisingly, a lot were in the transport sector. You've got airports, you've got public transport and others. And they were massively affected. Toll roads is another one. They were massively affected by COVID and still are. And so not surprising that perhaps some of the churn was in there. And then there's a spread across other social infrastructure like healthcare, has been incredibly hard hit. So we've seen that effect, but similarly seen a lot of sectors cope with it quite well and increase participation. And what we've had anecdotally from our participants is that, yes, this has been an incredibly hard year. GRESB added an extra month on for reporting, which was very well appreciated. But ESG has become even more important. And I'll let the panelists speak more about that. I won't steal their thunder. But I think that's anecdotally what we've heard from people, is that it's only highlighted even more so how important ESG has become. And they're absolutely committed to reporting on ESG and implementing better ESG practices. The last bit, and then I'll hand back to Dan to go to the panel, is the exciting award of the sector leaders. So normally we do the whole thing with the awards and coming up on stage and shaking hands and all that fanfare. I'll do it in a mini way today, but would like to obviously give our big congratulations to the sector leaders. Here's our fund sector leaders first, and I've highlighted those that are in the Americas region. So Capital Dynamics done particularly well with 2 sector leader awards, and Macquarie and Alinda have both got most improved awards in the funds. So congratulations, you guys. You've done fantastically well. At the assets, we've got our sector leaders first, and I'll go to most improved afterwards. But sector leaders across all the sectors that we cover, and a number in Americas. Congratulations to them. Celio Reeds in South America have done super well. Network Utilities, Bayon Energy Center, ITS Con Global in transport, and I won't even try to pronounce the hospital in Mexico. But fantastic to see all of those sector leaders, and particularly the diversity of sectors and geography that they're covering. And lastly, most improved. These are our most improved assets. Again, 3 in the Americas, being Novotel, Astoria Energy, and Desert Sunlight. So congratulations to all of our fund and asset sector leaders. Make the most of your awards, enjoy it. And I'll hand back now to Dan to kick off the panel part of the presentations. Thanks, everyone.
Great job, Rick. Thank you so much. I had a couple questions for you, but you answered them.
You did, yeah. If you want to fire those away, or we can come back to them. Sorry, happy to do whatever.
And I'm seeing there's 2 icons in the Q&A and 3 in the chat. So I don't know, maybe see if you can tackle those while we turn over to our panels. What do you think?
Okay, let me do that. I'll just stop the sharing, and while the panels get ready, let me have a look.
Sure. Well, here. So let me just let me go ahead. All right.
Okay.
So for
you
today's
go.
lineup, Yep. Thanks, Rick. Way to go. So for today's lineup, we really have 5 groups. First off, we've got Michael McCarthy. He's a senior portfolio manager for infrastructure in Americas at APG Capital Management. And so we're going to start with Michael, but in just a moment, I'm going to introduce everybody. The second is Steve Kennedy. He's a principal at Capital Dynamics, right? And they, as Rick pointed to, they're the infrastructure sector leader here in the US, and they were last year as well. I believe that Capital Dynamics had 4 assets in the renewables energy, and they took all top 4 spots. So that's pretty strong. The third, so then we have Trisha Brunell. She's the head of ESG for Olinda Capital Management and the GRESB Infrastructure Most Improved. And really that's about engaging the assets, where I think that the whole game with infrastructure and the infrastructure assessment lies. So way to go, Trish. We're going to hear from you in a moment. Matthew Brundle from Evora, UK. He brings a wealth of knowledge. Oh my gosh, our prep panels leading up to this have been amazing. I'm really looking forward to hearing from Matthew. And then we're going to round it up with the PwC team, right? And they interviewed an awful lot of infrastructure investors throughout the summer, and they're bringing forward some great insights for us today. So this is really going to be amazing. I think it's the best lineup that we've had with an infrastructure event in history in Americas. So thanks for everybody. So right now I want to turn to Michael McCarthy, and I want to kick it off with you, Michael, right? I always enjoy visiting the APG website, right? Sustainability is forefront with all of the things on the cover page, and you really start to dig deep in there, and you see that this is integrated in the way that your organization thinks and acts. So you're also a founding member of GRESB. We definitely appreciate that, and you have a deep history in sustainable investing. So let me turn to you, Michael. How are you? Come join us.
Dan, I should be here with you. Can you hear me okay?
Yeah, we got you.
All right, fantastic. And thanks very much for the invitation to participate. I too am excited, very excited about Matthew, as you are, in fact. So we share the enthusiasm for the topic, and pleased to share the stage here with fellow participants. Just in terms of us, if it's helpful, I'll give you a 1-minute introduction to APG so everyone knows a little bit about our organization, and we can go from there. I sit in New York and I'm part of APG Asset Management, a very large global fiduciary asset manager, managing pension assets, approximately €500 billion, in fact, so about 600 million US under management on behalf of 22,000 employers in the Netherlands. In fact, 1 in 5 families in the Netherlands is a participant or current beneficiary. We're in the US, again, based in New York, and I sit in the infrastructure investment team. We are active infrastructure investors since about 2004, and globally have a portfolio in infrastructure of about 16 billion euros with 36 direct investment stakes. So definitely big in the infrastructure space and early adopters of the ESG component of that investment, which happy to talk more about today.
Yeah, well, so keep going. Tell us, when you're making investments, due diligence through ongoing monitoring, can you give us some flavor? Because it's always the #1 question that I get, right? How do institutional investors really integrate this? And so that, there's going to be a wide spectrum of behavior. I think you guys are amongst the leaders. So we'd love to hear, some of your vignettes as to how that really happens.
Sure, no, sure. And indeed, I think the tone from the top really helps. I mean, certainly we're in tune with what our clients are asking us for and what our beneficiaries expect, which is a move towards a sustainable universe. And that investment universe has to consider all of those components from the environmental, social, and governance aspects that your survey seeks to measure. So we have made some public commitments in terms of total investments, and also report and advocate for other reporting on those aspects through our sustainability initiatives. We have a dedicated team of professionals that I turn to help us work through some of the nitty-gritty and difficult issues that we may arise. But from a policy perspective, we have sort of a policy of exclusion and then inclusion. And the exclusion policy sort of deals with the what won't we invest in? And it's actually a fairly short list. And then the inclusion policy is all the other things, which is how are we going to engage with people and our investee companies to try and affect the ultimate goals of sustainability that we've set for ourselves. So we spend a lot more time, frankly, on that inclusion policy. And it starts at the very beginning in our group with sort of the investment screen. And before we sort of roll up our sleeves and dive in deeply, we are sort of comparing against the likelihood that we'll encounter issues with any particular investment. That said, and as I mentioned earlier, I think our exclusion policy list is very short. Really things like nuclear arms, investments we prohibited, companies that are actively in that space would be a great example. But otherwise, we try to meet our investment companies where they are and try to make them improve, which is exactly the sort of thought leadership that I think GRESB is putting out there, which is let's push the entirety of the industry to become better. Now, that means we've got some portfolios and some investee assets that are actually in the lower quartile, and some who are here on the panel who are in the top quartile. And we're doing different things with them along the way, but the key and the key for us is that they continue to engage. And so the slide in Rick's deck that made me the most nervous was actually the 75 or so, if I read it correctly, folks who drop out of the survey. And I think the question for all of us, a good question to think about is, why have they abandoned that tracking?
Yeah, so generally, this comes down to bandwidth and time, and why is it important, what's in it for me, all of those issues, right? And so I observe that ESG is for everyone. And it's not about, getting to, I was going to ask Rick, can anybody ace the exam? And then he told us, yeah, it's possible to get, a very high score. 95 seemed like one ceiling, and then 100 for others. But that's great, but there's always more work to do. And I like the APG approach, which is, okay, participate, see where you're at. That's what drives a benchmark. So if you score a 20, okay, well, what are the forward plans to deliver what I believe is your ultimate goal, or better risk-adjusted returns, right? And using this lens. So I'm sensing that's how it works for you.
Yeah, maybe I can jump in very quickly, because we have talked to many of those. It was actually 89 assets that dropped out for this year, and almost across the board, almost 100% are saying, look, we really wanted to participate, we just can't this year, we're an airport or whatever. But we're absolutely committed to rejoining next year. And so, it really bodes well. I think they all take it seriously. They wanted to participate. They just felt back in March, when a decision was made, that it was pretty tough, and you can see why. So it does bode well for next year.
So Michael, I do have a question for you, which is, as you contemplate the road ahead, are there particular metrics that you're interested in? Like if somebody's raising capital for a fund, that you're going to say, look, you definitely have to report or let us know GHG emissions and what we're doing to drive those down. Are there things like that are forefront on your mind?
Sure. So CO2 emissions is definitely one that we report actively, and it's sort of on page 2 of our global sustainability report for APG. So that is definitely front and center. I think more and more we're asking folks to come up with their own key metrics that are applicable to their industry, but we are looking at biodiversity issues, diversity, and certainly health and safety has always been I think the backbone of this type of reporting. So that's primarily where we're driving, but it is a curiosity of mine as well to see, again, when I say we're meeting companies where they are, what they have and what they're reporting on already. And often they are sort of tracking some of these metrics that we would find useful from an ESG perspective, but they haven't categorized them as such. And sometimes not. So that's kind of where we're headed.
Well, it's funny because I call those random acts of sustainability that are typically happening within portfolios, right? And by using structured frameworks and non-financial data and doing it consistently in a wash, rinse, repeat over time, you start to elevate those metrics. And you brought up, letting the asset or fund tell you what is basically material to them. And honestly, that's the first exercise that one has to go through with the GRESB asset assessment. is do a materiality assessment. And what is material to you? Because there are issues out there that may not apply from a business setting. So good.
No,
Michael?
exactly right.
Yeah.
And I would just offer, I think a lot of firms come to the GRESB survey if they're not already well versed in ESG with trepidation. And I'm very appreciative of GRESB offering, a shadow rating for a 1 year, experiential sort of respond, and yet we will not publish your results. I think that is a really good teaser activity for folks who are again approaching this with interest but trepidation. So keep doing that, please. That's helpful for us.
Well, we definitely will. And honestly, just to be, very literal, we don't publish those results. You as an institutional investor, you can request access to those results. In the grace period, everybody's dark. You can't even see that they participated. So that's good, right? It allows people to figure out those random acts, kind of collect them together, set a forward pathway. And so when they do it again in 2021, they're seeing that upward climb. And I believe that's what you're after, right?
Exactly.
Good. All right. Well, thanks, Michael. Hang out. We're going to probably ask you a couple questions here at the end. I'd like to turn now to Stephen Kennedy from Capital Dynamics, right? GRESB Infra sector leader in clean energy. So, Steve, are you out there? Greetings, right?
Hey, Dan. Thanks for having me.
What's happening with you? Hey, there you are. All right. How are you?
Doing great. Thanks for having us.
Oh, absolutely. Can you believe you guys swept first through fourth place in the asset level assessment? That was strong.
Yeah, we were a little bit nervous to repeat what we did last year, but I'm glad to see that some of the improvements in terms of our approach to ESG, responsible investment practices, seem to be reflected well in the assessment.
When we were talking leading up to this, there's something that I noted, which is that you have this proprietary investment rating system based upon the UN SDGs, the Sustainable Development Goals. So I'm curious to hear a little bit about that. And then also you had been mentioning that you've been highly focused on your supply chain and really looking at equipment manufacturing, labor issues in those aspects. So tell us a little bit about your firm and then try to dig in a little bit on those two topics if you could.
Sure. So quick intro on the firm. For those who don't know, Capital Dynamics is an alternative asset management firm focused on private markets with just over 17 billion in assets under management now. Over a third of that sits with our clean energy infrastructure business specifically. And we make direct equity investments in carbon reducing renewable power and battery storage projects in the UK, Europe, and in the US, where we've actually grown to become the largest private owner of solar assets. In terms of the proprietary ESG scorecard that we developed, we call it the RI scorecard. It's underpinned by the UN SDGs, as you mentioned. And we essentially have two different scorecards. One is utilized more to measure, typical co-investments, direct equity investments, and more of the corporate mid-market buyout space. And then we slightly tailored that scorecard for the clean energy infrastructure business, just to better reflect the ESG factors that we look at as infrastructure investors, just to be more accurate in reporting to our investors, as well as our approach in underwriting new projects and monitoring those projects post-investment from an ESG standpoint. And in terms of, I think your second question, supply chain, definitely a big focus for us coming into this year, something that we started to look at even more critically, I would say Q3 and Q4 of last year. We think we are perhaps maybe more well equipped to manage our supply chain from an ESG standpoint due to the fact that we've been investing in clean energy for over 10 years now. We have an integrated asset management team. So in terms of kind of that power over the supplier dynamic, that allows us to ingrain some more, guidelines and requirements from an ESG standpoint when we look at, our contracts that we have with suppliers, other project partners involved with our investments, et cetera. I would say on the equipment side of the business, we've been looking at, what type of equipment do we purchase, whether it be solar panels or batteries. How do we, internally evaluate and monitor sustainability practices that those manufacturers and suppliers have? How do we use third-party scorecards to help assess those manufacturers and ensure that we only purchase equipment from those manufacturers who obviously, have great technology and reliability of their equipment, but also have, above average scores in terms of sustainability. And then on the labor side of the business, in terms of looking at our labor supply chain, how do we structure ESG guidelines into our contracts with project partners, including diversity and inclusion in our questionnaires and EPC contracts, et cetera, in addition to doing, some of the actions we had been doing already and that I'm sure, most others on this panel are doing, health and safety training, measuring and reporting on any health and safety incidents that occur, tracking job creation data, et cetera.
So it sounds like you've got a pretty extensive checklist, and I can't help but wonder, okay, so you're doing that as part of the investigation with the supplier. What if they fall short? But yet you might really want, what do you do in that instance? Are you an engager, or are you, no, sorry, we need to find a different supplier? How does that play out?
Yeah, we, knock on wood, haven't had anything occur yet, at least since we've implemented some of these, scoring frameworks, if you will, over the last year and a half, let's call it. But we do look for opportunities to put penalties in place if certain clauses of a contract might be violated. And obviously we keep relationships with multiple suppliers just in case, as you pointed out, if something were to occur, it violated our guidelines and we said, okay, we can't purchase equipment from this supplier anymore. Who can we purchase equipment from? So we do have kind of some contingency plans in place that we hope we never have to exercise.
Perfect. So then my last question here is you're looking forward to 2025. Are there issues, metrics, ideas that you're focused on that you're really going to dig into and push? Tell us a little bit about that.
Yeah, I would say this, our biggest initiative for next year somewhat ties into the resiliency module that you mentioned earlier. And it has to do with physical risk and climate change, TCFD reporting specifically. We think, given that we've been investing in this space, we have a dedicated asset management team. We've been able to gather and analyze a lot of data and information related to physical risks associated with climate change and trying to gauge the vulnerability of certain projects and how extreme weather events, whether it be, wildfires, flooding, dust bowls that could, soil solar panels, et cetera, and trying to estimate, the associated financial risk with such an occurrence. We have a decent set of data there, but we're trying to find, third-party external data to give us a sanity check, help really quantify and score and monitor that data on an ongoing basis, which we think will obviously also help us with TCFD reporting next year. So that's the big focus for us over the next 3 to 6 months, I'd call it.
Excellent. Well, you and I are going to end up talking about our climate risk platform and the Munich Re data that's sitting on that. So we'll do that in December.
Sounds good.
Nice, great. All right, well, the sector leader thing, what it does is it creates some competition. And I'm aware because I have the lucky benefit where I get to talk to other fund managers out there. So now I'd like to turn to Tricia, right? Tricia Burnell of Linda Capital Partners, who has, claimed the most improved. And I think that she's nipping at your heels now. So Tricia, where are you? There you are. Hi.
Nothing wrong with a little competition.
Yeah, well, I like this competitive race to the top, right? I've worked really hard in my view and at GRESB to promote this, and I watch it work. So this is great. Talk to us, tell us a little bit about your firm and tell us the kind of things that you're working on. And then I've got a couple of questions for you.
Sure. Thanks so much for having us. Linda Capital, we are what I would say is a mid-sized infrastructure fund focused on private investments. We invest in a whole variety of sectors within infrastructure. We're currently focused on transportation, digital, and what we term utility-related businesses. We do have some midstream assets in the portfolio, some ports, so a broad range, and we're geographically diversified. I would say in terms of ESG, our approach is very much an ESG integration strategy. So we really do try to start from the beginning when we're screening assets, considering ESG as we look at new deals. But I think then the real work begins once we start onboarding, and we really start the ESG process day one. And kind of hearkening back to what Michael touched on, we'll see a variety of sophistication in terms of an ESG program at any given asset within the portfolio. We have some that are probably very far down the path and have done great work in reporting. Some are a little newer to the concept. So, it's our job to help them get in place a good ESG program. And we've really found that the GRESB tool is a great framework to really get management engaged. It's particularly helpful with, as Michael alluded to, those that might be a little hesitant. It might seem a little bit overwhelming. And I think it gives us a way to really break it down for them into component parts. I think some of the takeaways they find is a lot of times the information really is there and they're doing all the right work. GRESB kind of forces them to unearth that information and share it even internally. So I think they walk away pleasantly surprised that there's a lot of information there that, one part of the business didn't know the other part was doing. So it's a way to bring it all together. It might take a cycle or two of the GRESB process for management to really kind of see that come through, but I think it really does. And I think then once they've done it once or twice, they really do get on board that there's a lot of benefit. They've got some useful information that they can share with a whole range of their stakeholders, not just with us as an investor. It really can be applicable to a broad variety of stakeholders.
Right. So going through the process the first time is trepidation, almost some reluctance, right? And then
sometimes, yeah.
Yeah, but you've done great. You've gotten all of your assets to start on this process. And so are there some that are a little bit further along because I always observe it's typically the third year that this really starts to click. First year is a pain because it's the treasure hunt around the organization. The second year, you kind of see a score go up and that gets momentum going into the third year. Is that sort of how it works out for you too?
I think that's a good generalization. Yeah, I think, first look at this, it can look a little intimidating when you first look at the GRESB assessment. It seems like it's, very long and very complicated, which if you help them break it down, it really does get to the heart of it. And they'll realize that they've got 90% of this information. They just need to find it and communicate it effectively. I'd say it takes a couple of years. The other thing that I think is really critical is senior management really has to be on board in the process and make sure the resources are available to do a great job on this. And it does, as I say, sometimes, take a cycle so they can kind of see what the benefits are. And then once you get that leadership internally, it really can drive some great participation.
Great. And so then the last thing is I noticed, so you and I have had some conversations about debt and using ESG as an indicator there. Can you give us a little flavor as to kind of what prompted that and what's happening in that issue with you?
Sure. Yeah. I mean, this is a bit anecdotal at this stage for us. I mean, and I'm mostly referring to kind of commercial lenders,
Sure.
Which is usually our primary source of funding at the asset level. We're just hearing more and more requests during the underwriting process to put forward, green credentials of the assets. Maybe not necessarily GRESB specific, but they want to know that there's been some kind of third party review done that validates that they're doing all the right things in ESG. So it's, can be a pleasant surprise for a CFO who at first might say, oh, geez, do I have to come up with some whole new process now to produce this for a potential lender? That, they've got this work done. They can just use GRESB. But we are hearing that it's going to can be a component of the lending decision. I think ultimately it's going to probably translate into some cost implications. And we are in some cases being asked to commit that we will continue to undertake the GRESB assessment at the asset level for the duration of the loan.
Yeah, well, it's my understanding that so on the equity side, that's how, APG prefers, right? If you'd like us to invest in your fund, then we'd like you to participate, right?
Yeah.
So I can see that happening as well. Because the idea of benchmarking is you're not just one and done. You want to continue to keep up and keep pace and hopefully be a trendsetter as well, right? And it's all about risk-adjusted returns at the end of the day.
Yeah, no, and I think that's great being a trendsetter. We can offer that up proactively, even if it's not asked for. And I think that can just be a part of putting our best foot forward.
Awesome. Perfect. Well, I know that one of the assets that you own is Heathrow, right? And so now I want to turn to a man that's probably spent a fair amount of time at Heathrow, Matthew Brundle from Avora, right? He's with us today. And normally we wouldn't be able to do this, but because we're in the 2D world with Zoom, we can zoom in with Matthew. Are you out there, Matthew?
I am. Good morning, good afternoon from here, but good morning to you guys over there.
Thank you. Well, and so when I introduce you and I mentioned that we have an expert amongst us, I really mean we have an expert, right? So you've been part of the BREEAM standard setting and part of SQL. So give us a little background about you and be modestly brief, but yet to the point, and so we can then dig in a little bit as to what you're seeing out there in the UK. Some tips and tricks to move ESG forward for folks.
Of course. Well, when I'm asked to do these things, it does remind me that I'm actually getting quite old. So I've been in the sustainability.
You're wise.
I've been in the sustainability and consulting industry now for well over 35 years. I started my life as a pollution chemist, so very much at the kind of the mucky end of construction, dealing with sort of contaminated land remediation and site supervision on many major infrastructure projects. I spent time, as you've quite rightly pointed out, on sort of planning and development side, and was integral to the Terminal 5 project when that was being constructed back in the mid 80s. I have been involved with the BRE. I was originally on the BREEAM development panel that developed the Bring for Offices scheme back in the mid 80s, and then more recently I've been involved with again the BRE integrating the latest version of SQL, which is a sort of the SQL is the certification scheme for infrastructure projects that we have over here. So I've been involved in the kind of the mucky end of construction management, planning and development, and master planning, as well as developing SQL standards and certification schemes to go with those kind of projects.
We're so pleased to have you. And so there's really three things on my mind, coming into this. And so let me just lay these out here and we'll tackle them one by one. So materiality, right? So it's one of the key things with the asset level assessment, right? Let's peel that a little bit. Talk about the resilience module. We've had that out there for a while. We've heard a number of the panelists speak about that, and Rick led into that. And then the third thing is this idea, especially in the first couple of years when people participate in this, is ESG. It's a reporting odyssey. I'm spending all this time, right? And so how does that shift then to this? Instilling a culture of continuous improvement. So first off, materiality. Let's talk a little bit about that.
So yes, you're right. Materiality, an incredibly important concept. Of course, it's not new. It actually has its origins dating back to the mid 1970s. In fact, I think that the original definition for materiality came from the US Supreme Court. So it's not a new concept. More recently, of course, it was adopted and very much part and central to a number of ESG investing practices. But in the most recent past, and I'm talking within the last couple of years or so, it's very much become mainstream. So it's very much embedded into all investment activities, certainly as far as we can see. And interestingly, organizations like SASB now are referring to materiality in terms of both being double and dynamic materiality, which is really getting to the kind of the nub of the issue is linking fiduciary responsibilities to sustainability responsibilities in a way that perhaps it probably wasn't in the early stages. So it's now firmly embedded into what we see as normal good business practice. And it's an incredibly important tool.
So with that, let me bring Rick Walters back in from Amsterdam, and let's have a quick EU conversation about this, because Rick has been really driving this issue forward with the asset assessment. Rick.
No problem. Yeah, we we all recognize that infrastructure is a very diverse asset class. You've got everything from schools, hospitals, toll roads, airports, energy infrastructure. They're really different, and we kind of lump them all as investors into one thing when we say, yeah, that's all infrastructure, great. But materiality is recognizing those differences. That's essentially what it does. So 3 years ago in GRESB, we brought in materiality assessment into the main asset assessment. And essentially what that does is identify what are the most material issues under certain circumstances for each asset that participates. A lot of them are based on the sector that it belongs to, as I just mentioned, but there are also other factors. If you're in a developed country versus a developing country, that can make actually certain issues more material than others. And so our materiality assessment recognizes that. And essentially after completing our materiality assessment, the asset assessment itself tailors itself to the asset circumstances. And essentially what that means is every asset is assessed and scored on its most material issues and how well it performed against them. So you could say they all do their own unique assessment, and they're all compared still because they're compared on what is material to them. And so it is a fair comparison, but it might be quite different issues. So I'll give you one quick example. Solar farms, for them, air pollution is not a material issue. Why should they be scored on that? Why should they have a policy on that? They shouldn't. So the assessment takes that out of the picture for them. They don't have to worry about that. They can focus on more material issues like their energy production, avoidance of greenhouse emissions, perhaps biodiversity is an issue for them because of where they're located. So that's essentially the way GRESB deals with that materiality. And I think that's been really well received, building that materiality into the assessment process.
So Matthew, as you work with your clients, does that kind of work out for them? Is that how you receive this?
Absolutely, and it's a really good thing that GRESB have done is to introduce this concept. It's a very powerful tool, and as Rick has said, it helps you to streamline the way in which you approach GRESB, but it also helps to simplify. I think what we find with a lot of our clients that it's almost with what you need to understand with materiality is if an issue is material enough to have a policy, then it needs to be backed up by an appropriate risk assessment and monitoring and reporting that goes with that. That's the way you'll maximize your scores. And it really does focus your time and resources into dealing with those things that are most material to that particular asset or that fund. So it's a really sensible way to streamline the process and simplify it and make it more meaningful to do.
So that
it's also a very important tool generally. And I think what I was also wanted to note, whilst materiality is embedded within the GRESB scheme, and it's something that of course we'll be returning to each year as you go through each assessment, it's important to recognize that it is actually a dynamic process. It's not an event as such, it's almost a journey. I think that's the way that certainly SASB kind of recognize it. They call it dynamic materiality, and it's a very powerful tool that can help inform not just your sort of vision and strategies, your communications, your reporting, but it's also really important to understand and use it to predict future trends and trend spotting. And I think as we all sit here in our various states of COVID lockdown, I think it's fair to say that what COVID has done for us recently is shown us that something that would otherwise not been a material consideration. I very much doubt many businesses or assets would have had pandemic response policies in place. But what COVID has very clearly shown is, literally out of nowhere, something can go from being non-material to being incredibly material. So, the materiality process, if it's approached in a dynamic way, can really transform the way in which you manage risks, and then you turn risks into opportunities. So, really important tool.
Well, and I think that's a great segue into the next topic, which is resilience, right? Us being here in a 2D world is the epitome of resilience, right? So, I think that's a focus, but there's, what does this really mean for real assets? It's physical risk and transitional risk as we try to transition to a low carbon economy. I would imagine that that's pretty forefront on the minds of your clients. How is that playing out? How are you seeing that play out for you?
Absolutely. I mean, no question about it. Understanding the resilience and the fact that GRESB have introduced the resilience model into the scoring element of future schemes is a really important and very timely intervention on your part. It's a complex topic. There's no getting away from it, but it does require you to take an appreciation of a whole variety of regulations and legislations which are sort of coming down the pipeline, and we've talked about the Paris Climate Change Agreement, the EU taxonomy regulations, and SFDR, and so on, TCFD, and so on. So there's a number of drivers that are pushing the need to look at the resilience module and embedding that into the scheme. Why is it important? Why is it important now? Well, fundamentally, infrastructure has a very significant and profound potential to impact on reducing society's exposure to climate change. Both positively, but also, of course, if not effectively managed, they also, infrastructure projects also have a huge potential for negative impact. So it is really important, and it's not to be understated how big an impact infrastructure can have in how we all collectively respond to the climate change crisis. And it's quite interesting that GRESB have introduced it, and I think what is probably the most important message to sort of note with this introduction into the scheme is it very subtly shifts the concept of retrospective reporting to being one of more proactive and future forecasting. So rather than simply reporting what you've done in the past, and obviously the performance module within GRESB does that very effectively, it's now twisting that focus towards looking at what is coming down the pipeline, what are the issues that I need to be aware of, and how do I engage with those in a very proactive and positive way, rather than being surprised as they emerge. So it's a really important and very timely intervention that GRESB have done by introducing this module. And it's
so
quite
the
interesting.
light bulb that goes on? The light bulb to me is, it's a 3-month odyssey, and I gotta unearth all of this data that we may or may not have tracked, and I might get a poor score, and I'm not sure. 2, moving this idea to continuous improvement, and I would imagine that just confronting organizations with a series of questions and doing it continually over time leads to that shift from a backward looking to a forward looking. Has that been your experience?
Absolutely. Obviously the best way to engage with GRESB is to engage with it not as a sort of a single annual event that you do as a kind of a necessary evil, but to actually positively engage with it and use it to drive continual improvement. And Evora as a business has been had a very long history with GRESB. We've been involved for the last 10 years, and obviously we are proud to be part of the infrastructure scheme as well. So we've been involved with it for a number of years. And what we find is that, whilst clearly there are some people who embark on the GRESB journey with a little bit of a distressed purchase, the vast majority engage with it and fully embrace it. And what that's done for us is enabled us to engage with our clients, and we've developed dedicated data management software tools, for example, to aid the submission of the performance data. But what that crucially does for us when you sort of capture that data, and there's no question we live in a world of big data these days, and we're going to have to get very comfortable with gathering data, measuring data, monitoring and interpreting data. But what that does is give us that sort of dynamic ability and that relationship to track performance, spot anomalies, make future recommendations about things that may be kind of evident within sort of data trends. So it's a really important thing to get familiar with data and the power of what data can do for you in terms of driving that continual improvement.
Absolutely, and I got a sneak peek. Well, you showed me how this tool works, and it looks amazing. So keep up the good work with that. Last thing is, are there, for the people that are thinking about getting ready for GRESB or working on it, right? Any like a tip or trick or 2 or 3 besides getting started early, right? What else can you offer to the folks?
Well, that's clearly one of the key things is to start early. Don't wait for the scheme. You can pretty much see what's coming down the pipeline in terms of how GRESB is moving with things. What we find is organizations that already have sort of management systems in place typically do very well at this. So the thing that drives a lot of them to do well is that sort of classic Professor Deming plan, do, check, act cycle that you go through. And if you can kind of embrace that into your organization, so that you look at GRESB as an opportunity for you to provide your current status, but not necessarily look at it as a short window of we just do that and then we forget it and we wait for the results and we forget it for the next year. The trick to really doing well with GRESB is to look at it on a continual basis and engage with it, and to help that drive both innovation and also stakeholder engagement, as has been said earlier. And it's really important that, it's not possible to do these things on your own. You work as a team, and it's important to to recognize that to engage with the asset management entities. We need to kind of educate and inform and feed them information about what's emerging, to give them that easy pathway through the process. So keeping that dialogue going and using GRESB in that kind of dynamic way is definitely the way to go.
I love that. And to me, so I've heard this before, ESG is a team sport, right? So absolutely. Thank you for, being part of our organization for 10 years and for all of the leadership that you've done over your career. It's truly amazing. Thank you.
Thank you. Delighted. Thank you.
Awesome. All right. So with this, I'd like to turn our attention to some folks here in the U.S. at PwC. We've got Richard Gilchrist and Shireen Yu. They're both directors in sort of different organizations, or in different parts of the organization. But one of the great things that they did right when this, I met with them in February, maybe it was, no, I guess it was March. It was March, right when the shutdown was happening. I was in the PwC office, right? And they were kicking off an effort to talk to a lot of infrastructure managers about their ES&G and the efforts that they were doing. So I heard from them that there are three things that are on their mind: business value, authenticity of the data, and governance, because you can't get the E and the S if you don't have the G. So I'd like to have Shireen Yu and Richard Gilchrist join me here. Are you out there?
Yeah, Dan, thank you.
Dan.
Yeah, really good to be here. Thanks for the invite to the lineup. Really fantastic lineup here. I'm taking notes here, so really picked up some things. Unfortunately, I think we did plan to host this event in our offices in New York, so that's unfortunate. But it's good that we've got a bigger crowd, probably because we're doing this online. So thank you. And I guess to your point, Dan, we started doing this interviews because like Rick Walters was going through the slides, right? It's hot on the minds of infrastructure fund managers, private equity infrastructure fund managers in particular. And it was, it's starting to mature there. People really upping their games over the last 12 months or so. So we embarked on this, discussion because we were trying to figure out what it was that we could be helpful to our clients with. And then separately, Rich Gilchrist, or separately or together, Rich Gilchrist is part of our sustainability services practice, which, I'm not sure a lot of people knew that about PwC. We've got, an audit, tax, advisory practice, but sustainability services is really rising as well. We provide a lot of work there. So some of our perspectives are shaped from some of the stuff that we're seeing there as well. And I also wanted to thank Rick Walters for spending some time with us in the summer when we were kind of trying to flesh out some of these data quality issues. So thank you. But going straight into it, sort of building on what was previously said, I think what I really heard, from the business impact perspective, Michael talked a little bit about APG going sort of more towards the inclusive sort of ESG sort of investment criteria. And I think what we're seeing is a subtle shift. It's not a big one, but it's very real and very important. Like, we're moving towards, ESG from a sort of compliance activity to a sort of a value creation activity, really. Things like employee health and safety, diversity and inclusion, decarbonization we talked about just now. All of those factors really hit the bottom line. And so I don't think we've seen too many infrastructure managers sort of quantify directly the impact of good ESG practices on specific return percentages, but they're definitely thinking about it, and we're definitely seeing it from a deal selection, due diligence perspective. And while this is really good for everyone here today, right, because ESG now is elevated and become the forefront of the business, it just means that there's more of a spotlight shone on the data used to sort of make these sort of decisions, right? So making sure that stuff is really good and valid. We'll come back to that in a second. The second point, Dan, you mentioned was governance. while each of the E, S, and G pillars are clearly important, but without the governance piece of it, I think the whole ESG program really kind of falls apart a little bit. I think, you know, Michael again talked about tone from the top from APG, right? But I think, and we talked a little bit, you know, Rick Walters talked about how diverse this was, you know, Tricia talked about Alinda engaging with the portfolio companies. It's such a broad, diverse group of sectors in all kinds of jurisdictions with all kinds of their own local regulations and standard setting, and you throw in some ESG standard setters and you get an alphabet soup of challenges, I guess. But so I think where it's just so important for the fund manager to sort of engage and sort of have that governance structure with the portfolio companies, right? In order to, you know, align on material issues. We talked about materiality, like making sure that the portfolio companies know this is important to them. It's value adding. It's not just another compliance exercise. And it's definitely not, you know, it might be something they're already doing, for example, but, you know, kind of adding this on as value creation activity from an ESG perspective is key. And also the governance factor allows us to sort of put good processes and controls in place in order to get the good matrix from our portfolio companies, right? And that last piece, which kind of leads me to the authenticity bit of it, which, you know, Rich can talk about a little bit in a second, but we've heard, you know, all infrastructure managers are sort of upping their game over the last 12 months or so, right? So there's a lot more ESG stuff out there, ESG information. We think that some investors are starting to get a bit skeptical. The SEC has started saying that they're, for registered investment advisors, they're going to be focused on some of the ESG claims put out. You know, there's a lot of that kind of stuff going on, but also, you know, just internally making decisions about investments, like very important decisions. You're basing it on these data points. So it's really important to get it right, I guess. So technology is part of the solution. Regulations is part of the solution. I think we might talk about regulations later if we have some time, but also people are thinking about how to build trust. And, you know, Rich, maybe that's where you kind of start saying what we've seen others do from a building trust perspective.
Yeah, no, thanks, Shireen, and definitely building on some, you know, Matthew's discussion on data quality, and I think, you know, Steve talked about some of the complexities with you know, TCFD disclosures and resiliency. You know, definitely there's some more complex areas out there. A lot of this is pretty new. You know, we talked about dynamic materiality and new metrics that companies are reporting. You know, inconsistencies across regions, you know, across geographies, and even within the same portfolio company that could be different, right? So I think, you know, Rick brought up a slide that showed the large increase in targets this year that are being included. So, you know, a large increase in targets, large increase in commitments. Coming with that, of course, is the integrity of the data, right? What is the baseline that you're measuring on? What kind of challenges might you have as you go through that target setting process? How might that change over time? Obviously, something that's very important. And also, obviously, linked with targets, we often see compensation as well, executive compensation, you know, various areas that we're focused on, and even coming down to the supplier selection that we talked about earlier as well, in terms of solar panel selection and some of the supplier questionnaires. We're also seeing a lot more of a push within the supply chain, within the value chain. You know, I work with a lot of the oil and gas midstream companies, exploration, production, every sector I work in, and all of them are talking about how they can improve their ESG reporting, what people are looking for, what kind of metrics they're looking for. There's a whole alphabet soup of frameworks out there. So what is material to the company? What should you focus on? And then really just doubling down on the actual data quality. So thinking about some of those challenges, such as consistency of information, you know, really trying to think about the financial reporting processes and controls and trying to bring that into the non-financial data as well, because this is the information that's just as important to investors, you know, long-term. You know, we're looking at this for the next 10, 20, 50 years in terms of climate change. There's some big numbers out there that the companies need to think about. And when companies talk about net zero, what is your baseline, right, to start with in the first place that you're getting to? So, you know, just getting started in reporting, even if it's, you know, not the best score. You know, PwC, we came out with our diversity and inclusion results this year for the first time. Never showed those before. Not great numbers, but we brought it out. You know, we're going to deal with it. We're going to work on it. You know, once you get, you know, working through the GRESB framework and the reporting, you can look for those areas and those potential areas that you can improve. But I think that in terms of data quality, I think Rick talked about this automated system now within the portal that will throw up some exceptions in terms of anomalies when you put the information in. That's the kind of easy stuff that you know, companies just should be thinking about and trying to formalize those procedures. That way, not only is it more accurate information, but it's also easier on the company as well to pull the information together, because there are so many different frameworks and requests out there that it's just a real, a lot of resources are required to meet the requirements. And so I think just making it more standardized and putting some of those controls in place is very important.
Well,
That's
so
what
first off, you guys are amazing anchors to this relay race that we've just held today. So that was an awesome summary to weave in everybody, right? One of the things that I picked up on of your work over the summer was really when you're engaging with companies, asking why this metric is important, right? What's the methodology, the process controls, and the checks and balances? So can you give us just a little bit more about it, because it's a mess sometimes when you look underneath the hood of data and getting this baseline. So a little bit more on that if you can.
Yeah, I mean, definitely use the term Wild West sometimes. I come from a financial reporting background and then, gone through the SOX environment. The thing is though, and you mentioned it, Dan, the company often has those controls in place. They may not just know that or realize it. When you think about diversity and inclusion controls, you've got payroll expense, you've got costs, you've got controls that are forcing segregation of duties, for example, areas that are very important to the financial reporting can also be relied upon. So I think that it's just, setting the stage to have a more formal process, a process that is repeatable and consistent, and has a tone at the top where the accuracy of the information is important. So we often find that companies might maybe report to GRESB and then report to another channel, marketing material, different materiality assessments by country. With the EU directive, not sure maybe companies are reporting and getting assurance over some certain specific ESG components within the EU that might be different to what's being reported in the US. So it's really just trying to get that overall governance over the reporting, take stock of what you're reporting, make it more straightforward. Let's really focus on those material areas and be consistent across the portfolio. And then once you do that, obviously, then you can start to leverage. But those simple areas that you can focus on is just it can be pretty straightforward to get started on. Takes a bit of time, of course, but even just thinking about looking at some pilot areas to think about that are most important, for example, the metrics that are reported to GRESB, start focusing on them. And then for those that aren't important, really make it clear in your communications to others why it's not important for you, but also doing this annual refresh to make sure that it hasn't become important.
I've got to imagine a single source. Yeah, I've got to imagine the single source of truth, right, within an organization is probably the trickiest, because it hasn't been, and I'm trying to use the word structured non-financial data purposefully, because we've got a whole 80, 90-year ecosystem of structured financial data, but this is new. It's sort of appended on. So I would imagine that's probably one of the biggest challenges.
Yeah. And then I think we've seen a lot of people start putting in technology to sort of collect the data. Most of it is an extension of what's already collected from an operational perspective, but sort of having that single source of data and putting that in one system so that, Matthew said, you can look at the data and you can make some predictions, you can analyze your data properly. I think a lot of people were still sort of doing a manual process around that, but it's starting to change. And Rich, I think we've been doing some stuff. We've seen people do things around policy as well, haven't we?
That's right, yeah. Yes, you mentioned the SEC and thinking about some of the, we talked today about some of the due diligence policies and the post-acquisition work that might be done as well. Those policies, for example, some of the principles of responsible investment policies that are disclosed by companies, we are seeing now that we're starting to work on helping companies to make sure that those policies are, very tight in terms of the actual action that's taken, really proving that there is some documentation behind their actions. So that we can say, look, if this is what you say you're going to do, then this is actually the evidence behind it. There's almost an audit trail for the work that you've done to be comfortable with that specific topic that might be relevant to ESG. So that it's not only just the data, but it's also just the action of going through and performing those reviews, doing those 100-day plans, making strides in identifying risks and opportunities and building it into the enterprise risk management of that company. So that going forward, everyone is comfortable that those actions have been taken, and it's not just some type of marketing material. So that is another area we've been working on.
Perfect, Shireen. Last word from you. I'm stunned that we're at the top of the hour. I want to hear from you, Shireen. I want to then turn to Rick and see if there's any outstanding questions that are out there, and then we need to have a little closing.
Yeah, I mean, I think to close it, I think we've said everything we wanted to say, really, but ESG is not going anywhere with COVID, et cetera, right? People are more focused on risk more than ever, right? It's climate change risk is something that is coming, and we can maybe do something around it, right? So in this pandemic age, focus on risk is like so much highlighted than it was. So it's not going anywhere. And I think private equity infrastructure managers are really upping their game, and it's only going to go one direction. So
I'm excited to have you host our event when we can do this in New York next time in 2022, perhaps. You're absolutely right. This is not going away. I think it is a precursor for climate change disruption. So thanks for ending there. Rick, how did we do on questions?
Yeah, thanks, Dan. I think I answered them all in the text, but maybe just to cover one off for everybody, somebody asked about why they particularly saw their scores jump from 49 to 78. Great improvement. Obviously, I can't answer without a bit more detail, perhaps, on their particular identity and case. But anyway, we can definitely say in the analysis of what's changed that there were some changes we made in the assessment, but they made very little change. In fact, some of them would have caused scores to go down. Some of them caused scores to go up slightly. Really, the dominant reason for the increase in scores is better reporting, better ESG reporting on more of the material issues, better reporting on those issues, setting targets more often, as I showed in some of the charts. And that's been really across the board. So it's really impressive to see the industry kind of stepping up. I think that's what we've seen. Sure, there's more to be done, of course, but that big change, that 10 to 15 point increase, is predominantly just better transparency, better setting targets. In the longer term, we will be evolving the assessments to focus more on actual performance, not just transparency. And so it'll get increasingly, harder and more detailed to get the really top scores. That'll be an evolution we'll go through with the industry. But for now, we're giving the highest scores for transparency and target setting. But over time, we will be focusing more on scoring for performance, actual performance. Is it hitting the right kind of targets and so forth? Are the intensity metrics sufficient to justify, that this is a top scoring asset? But yeah, hopefully that explains why there's been the big jump in scores. If anyone is interested in understanding any changes in their scores or anything, please contact us by our contact form. If you want a deep dive, we also have a results review process, which can be pretty helpful to set you up for understanding what happened in more detail, some of the validation decisions, and set you up for next year to do even better. So encourage you to consider that as well. Thanks, Dan.
I had 3 great questions for our panelists, but the clock has run out. But I'm looking at them now, and guess what? We covered all of them. So that's the great news. Greg, are you still with us? Can you close us?
I am still here, Dan. Absolutely. Yeah, just really quickly, we're at the top of the hour. Just please join me in thanking all of our esteemed panelists. I think I've certainly found it very informative, and the insights of today's event have been fantastic, and really thank everyone for participating. Yeah, this is where we would all clap and make some noise. I really appreciate the time of everyone today. It's been a great session.
Awesome. Greg, thank you. Shireen, Richard, Matthew, Michael, Tricia, Stephen, well done. Thanks so much for participating in our 2020 GRESB results event for infrastructure. And we're looking forward to keeping up the momentum going forward into 2021. Thanks again, everybody. Have a great rest of your week, month, and year. Thanks again.
Thank you.
Thanks, Dan.
Thank you.
Great job.
Thanks, everyone.
Bye, everyone.